Hey guys, so it's been a long time and I haven't done any videos as promised on the car thing. Yeah, but I did a market focus today and I decided to share something with you guys, and I think it's very important. So this is going to help you if you're a swing trader and if you're trading indices. So if you look at the pairs I've been trading and the pairs I've been doing the market focus thing on, it's mostly been, I think 90% of it, you have US 30, NAS 100, the S&P 500 and gold. So majority of what I look at is indices. So now if you look at what's happening with the trade war and everything, I want you to pay attention to this. So it's a very difficult time. Like right now it's really difficult, and I haven't taken positions, let's say for like 3 weeks now. I haven't taken any trades, be it on US 30, gold, NAS or the S&P. Now track back to I think 2020 when we had the COVID thing. You remember there was a market crash during that period, and I think there was another market crash in 2008. So once you have global uncertainty, it's very difficult for you to operate during periods like this. Now if you're scalping, it might be a little bit different. So if you're scalping, you might still see positions to go in and out and just capitalize on these quick spikes here and there. But if you're swing trading, it's really tricky right now. So this is what I'm looking at currently. I'm looking at the crash or the trade war and everything. So fundamentally it's a trade war that's happening currently. But when I look at the charts technically, I'm looking at it as a pullback. I'm looking at it as a correction thing. So in 2020 during the COVID time, we saw this correction coming in. I think 2008 we had another correction coming in. So this is not different from what has happened before. But what I can tell you is during periods of uncertainty, it's very important for you to watch the correction that is coming in. And now the reason why you're watching this correction is for like several reasons. The first one is, once the correction is over, then you see the bulls resuming the trend again. So you see the bulls coming back, you see buyers coming into the market. Now my personal belief is during periods of uncertainty, during period when the market is crashing, there's a lot of fear, like with retail traders or with some investors, and so people start taking their money out and people start, like everybody hops in on the sales and nobody is looking at the bigger picture thing. So for 3 weeks now I've not taken any trades, I've not taken anything. I've just been sat looking at the correction thing, and I was not expecting it to drop as much as it's dropping right now. So if you look at, say, let's take for example, if you had a trend line on the daily time frame, that trend line is broken. If you have a trend line on the weekly time frame, that trend line is broken as well. So currently I just did the market focus thing, and I'm even looking at levels on the monthly time frame. That's how deep the correction thing is. It's pulling, how deep the correction is going, and you need to really pay attention to everything that is happening if you want to capitalize on a situation like this. So you cannot get scared during periods like this, because now there's lots of people, I can bet you there's lots of people that's going to lose their accounts, especially those who's working with like funded accounts. If you was going hard during this period, let's say the past 3 weeks, trust me, there's lots of people that's going to lose their accounts. You need to understand the market dynamic, and you need to understand the structures price is giving you. So fundamentally there's a trade war, the tariffs, the US and everything. But at the same time, you can look at it technically and ask yourself, what is price doing and how can I get ready for a situation like this, or how do I trade a situation like this? So personally I would say during periods like this, take a pause, like just pause a little bit, don't take trades, like let price pull back, let the correction come in, let price take out whosoever is trying to take out, let the confusion set in, and then it settles down, it calms down, it cools down, then you can resume the buys again. So the long-term thing, so US 30, NAS 100, the S&P 500, I consider these pairs as predominantly bullish pairs. So over time, if you look at the S&P 500, you look at NAS, you look at US 30, these pairs are trading to the upside. So during periods like this, it's just a correction thing. 2008 was the same thing. 2020 during COVID time, it was the same thing. So these are just corrections. So the first thing you need to do, if you're swing trading, which is something I do, and I'm saying this to all those that are swing trading as well, and to anybody that's trading indices, it might be different for currency pairs, because during periods like this when the dollar is just tanking and the dollar is dropping, you might see like really good opportunities with currency pairs. So if you're trading, let's say GBP USD, Euro USD, AUD USD, you might see like really good buying opportunities on those pairs. But for those trading indices, and that's something I've been trading it for a very long time, and the crash in 2008, I can't even talk about it because at the time I was not trading. So I wasn't trading in 2008. So but the crash in 2020, that's something I witnessed as well. So there's another crash right now in 2025. So look at it the same way. It's just a correction thing. So after the correction, you're expecting a U-turn. You're expecting price to turn and start moving again to the upside. So my take here is, don't panic. There's no fear, and look at price from higher time frames. So if you was looking at, let's say, psychological levels, for example, which is something I use as well. If you was looking at psychological levels on the daily time frame, skip this. Now look at psychological levels on, say, the monthly time frame. So ask yourself, if price has broken through, let's say, the daily level, the daily trend line, weekly trend line, and now we're using structures from the monthly time frame. If you're using structures from the monthly time frame, then you need to switch the psychological levels you're looking at. You need to switch the trend lines you're looking at as well. So it's just like the market dynamic thing. You can't get scared, you can't get worried during periods like this. So that's my take. And if you have funded accounts, now this is for those that have funded accounts. If you have funded accounts, I have funded accounts as well. I'm not trading during this period, but you don't want to keep the accounts inactive, because you risk having your account breached due to the inactivity rule. So what you can do during periods like this, just open like very small positions on it, say 0.01 or maybe 0.1, depending on the account size. Open something like this, very small. Take a trade on those accounts just to keep the accounts active. But what you want to do, look at higher time frames, look at the monthly time frame, look at the weekly time frame. And if you want to make it like really better for you, look at the 3-month time frame and ask yourself, what's happening across the board? Look at NAS, look at US 30, look at the S&P 500, and you compare it as well just to get a correlation thing with the DXY. You look at it from the bigger picture thing. What is price doing from higher time frames? Because if you see what price is doing from higher time frames, then it makes it really easy for you to understand or to take positions on lower time frames. And that's my take. So it makes it really, really easy. Stick to higher time frames during periods like this, because that's the best bet. Higher time frames is going to help you compared to lower time frames. And another thing you want to do, if price is crashing, for example, what's happening right now, if you don't have a setup for taking, let's say, for taking trades when the price is crashing like right now, don't trade during a period like this. Because what I always say is, it's needless for you to risk your capital if there's no setup for you to trade. But if you have a setup, then you can trade the setup thing. So personally, as price is crashing, there's no setup for me, because predominantly, again, I'm a swing trader, and I wait for these pullbacks to come in, and I look for my setup, and then I take my trades. So currently there's no setup for me, and we're looking at higher time frames. So I was doing the market focus today. I was looking at the monthly and let's say the weekly time frame. That's how low I could go. And it's just, again, just to tell you, you need to understand the market dynamic thing. You need to understand where price is at, and once you understand where price is at, it makes it completely easy for you to take positions on lower time frames. So that's my take. It's not very complex, it's not very difficult, but sometimes you need to understand what price is doing currently. And again, you need to ask yourself, what's the general consensus out there? What's the public saying? And one thing I've not been looking at is like the news outlets. I'm not even spending time on things like Bloomberg, CNN, CNBC, all those things, because when you start listening to what's happening, like generally, you fail to understand like price is showing you what it has to do technically on the chart. So I'm not listening to any news outlets. I'm not trying to hear what people intend to do. I'm looking at the charts and I want the charts to tell me what to do, and that's it. I'm gonna stick with it. So I've done the same thing for like 5 years now, just looking at the same price action. I'm not going to switch it now because price is doing something else. No, if it's a correction thing, it's a shock in the market, that's fine. The correction is only there so we can take buys again to the upside. And another way you can look at it, look at the bullish run that came in. It came in a very corrective manner, and the drop is very impulsive. So what you can do is, it tells you already, when we resume the buys again to the upside, these buys are going to come in a very corrective way, because the sells were very impulsive. So we're going to buy in a very corrective way. What this tells you is, if you start buying, it makes it easy for you to scale in. It makes it very easy for you to scale in when price starts moving again to the upside. So it's just a lot you can look at, and it's a lot you can do on your side as well. Stay patient and don't get it like really confusing. Don't look at it as being frustrating. And if you've blown your accounts during these weeks, like I think the past 2 weeks, that's not the way the market is playing in a bigger picture thing. It's just a correction thing that we're facing right now, and after the correction, price is going to move again to the upside. So that's my take on it, and it might be a little bit too noisy because I'm on the freeway right now, but I hope you can still hear me. So yeah, and I think that's it, guys. And if there's any other thing, when I have the opportunity, I'm going to get another video out, just in case price changes, let's say in a week or two, and I'll let you guys know. Alright guys, thank you. Be patient and stay consistent with everything you do, and I'll see you during the next one. Bye for now.